Good morning, everybody, and welcome to another Mortgage Coach Tuesday interview. For those of you on the West Coast, good morning. And for those of you like me that is on the East Coast, good afternoon. I am coming to you live today. I'm broadcasting out of Alice Beach, Florida, which is a pretty awesome place. Anybody that's ever been through here, I'm sure you know about it. It's a pretty cool spot. We've got a very exciting call today. I'm excited about it because I don't think we've been doing enough of this type of sales training. So we're positioning this as sales training for new loan officers. But here's the deal, guys. If you're a loan officer and you've been doing this 10 years, 20 years, I don't care how many years you're doing it, and you're still giving families a fee worksheet and you're delivering price, not advice, you're a new loan officer. Because in the world that we live in today, advice is where it's at. There's lots of price exceptions, lots of rate shopping, pivot to purchase. And it's never been more important that as a mortgage professional, you're helping solve problems for families. And in some case, when you go through the case studies we're going to show, there are problems that the consumers don't even know. Like they don't know that they are losing millions of dollars in net worth because they have the wrong debt structure. So it's about solving problems beyond the transaction. Let's face it, if you're a top loan officer and you're closing a lot of loans, well, you've learned how to solve transactional problems. But we're talking about solving advice problems. So with me today as our moderators, we got Todd Bookspan. What's up, Mr. Win by Noon?
Hey, not much. I'm so excited to be here. I think Drake and Alex are going to add a ton of value, not just in helping you figure out how to give this advice, but also the fact that they're training other loan officers with these strategies. And, what I found with doing my group coaching program is that people are struggling, whether you're brand new in the business or whether you're in the business. As Wally had said on our earlier call, Wally Albieri said that he felt like after 17 years, he repeated his first year 17 times. And so I think it's going to be a great opportunity. By the way, I've got a waiting list already going for my next group. It's starting in a little over a month. So if you are not closing, if you're brand new or not consistently closing over 5 loans a month, reach out to me. I'd love to put you on that list because I think it's going to be another awesome class.
All right. And we also have Deborah Bird, Mrs. Plug and Play SM.
Good morning, everyone. And I'm excited to hear from Alex and Drake. And, I just challenge everyone who's listening to really think about what Dave said when he introduced this call. And of course, you guys know I run a social media marketing company, but I challenge you to really think about how does your advice make a difference and what is the long-term value of the advice that you're giving. And so keep that in your head as we talk today, because that means you must go beyond just price. It's not just about rate and fees. So I'm excited to hear from both Alex and Drake, and let's kick it off, Dave.
All right, let's get to it. So guys, I'm going to make this a training. So each of these top producing mortgage professionals are going to go through some strategies. They're going to do it in a way that's training. We'll ask each other questions. We're going to have Alex go second. Alex, it looks like you're coming to us live on a mobile phone. Is that right?
Yes. Yep. I'm on my phone.
So it sounds like you may not be able to share a total cost analysis when it's your turn. Can you email me a total cost analysis so that one of us can share it when you're up to bat, and we can make this, because this is a training. You're going to talk about, hey, this was the problem the consumer had, or this is what they were missing. This is what I showed them. So forward TCAs that you're going to cover today. Is that cool?
Yep. I got a great rent versus own to share with you guys. So
cool. So guys, make the note for first-time home buyers. We'll do some training on how to provide advice to a first-time home buyer. Thank you for joining us, Alex. So Drake, let's have you go first, if you don't mind. I think this is the first time I've interviewed you. You've been on the Mortgage Coach YouTube channel. Do you mind just telling everybody what market you're in, a little bit about your mortgage practice, and then we'll get into the story and strategy at hand?
Sure. I'm based out of Salt Lake City, Neo Home Loans, Josh Meadows branch. I've worked with Josh for 10 years. We lend pretty well across the country. I'm licensed, I think, in 14 states. And a big part of our business is serving physicians and medical professionals. It's not all we do, but it's maybe 60% of what I do personally. I've been a mortgage lender for 16 years. And what else do you want to know?
I think that's pretty good. He's closing over $70 million in production. And as you heard, guys, there's a niche, and that's one thing that I think in this market, it makes sense to have a niche. Maybe that niche is military families. Maybe that niche is certain types of loans. Maybe that niche is a local marketplace. Maybe Deborah will speak to that a little bit. Well, why don't you tell us the story and the strategy that you want to do a training on and you want to walk us through?
Yeah, so the idea behind this total cost analysis. So this was for a family of physician who came to me for a rate and term refinance. They were shopping me against their bank. They were a past client, in fact, and they had first reached out to their bank and they wanted to check with me because I'd done a good job of staying in touch with them to just see if I could match the bank's rate or beat the bank's rate. So, as we go through our consultations, we've actually built into our CRM all of these sort of detailed financial questions that we ask each client. And it's not just, setting up the loan, it's really digging deeper and trying to get down to their financial health and how they're building their long-term wealth. So I got into these questions, just knowing that I'm immediately up against a bank. They're going to have really good rates. And beyond that, it's just what we do. We're going to dig deeper and help them build their financial picture larger than just a rate and term refinance. So, of course, that client had reached out to their bank. Their bank gave them what they're asking for, the 30-year fixed fee worksheet, and she wanted to see mine. And so I dug in and got into the conversation with her. And I just asked, what other debts do you guys have? What's going on in your life? Where do you see yourselves going? One of our questions is, are there any current financial concerns or issues we can help you address? So as part of that, her answer was, hey, we have this loan we took out for a pool that was like $90,000 and the rate on it's something like 7.75%. And then we also have, my husband just bought into his medical practice and that's like $100,000 and that's at a 5.5% rate. These folks had quite a bit of equity in their home. I helped them buy it maybe 5 years ago, and they'd done really well in appreciation. So my mind went down the path of, all right, rate and term is not what you need. We need to be pushing you to consolidate these high interest loans and accelerate your goal, your journey towards financial freedom. So that's where I went with the TCA.
So from a training note for anyone listening to this, the client called for a rate and term refi, big bank, competitor gave them exactly what they asked for. 90% of American our mortgage professionals would have done the exact same thing. Drake got the whole picture and asked some questions. And now he's going to come in and present some options. Before he does that, Todd or Deborah, anything you want to say from what you've heard so far?
I just had a question for Drake real quick. So this client, did they respond to like one of your emails in your CRM where you were touching base and that's how you knew they had started the refinance process with the bank?
I think it's, we have yes, they were in our CRM. They were getting our emails. I honestly can't remember. We do have, what's it called? We probably got a trigger.
HomeBot?
Sales Boomerang, baby.
Sales Boomerang. Yes.
That's what I was going to ask is, Dave, how could Sales Boomerang get there quicker? Because in this situation, they had already gone to the bank, which kind of surprises me. Like, I wonder what made them go there when you were their lender. So I'm just trying to think, how do we solve that problem? Maybe it sounds like Sales Boomerang.
Yeah, well, that's how it got the lead. And it was probably a credit inquiry, put it on the radar. How could they have never have gotten that inquiry from someone else? That's a different topic and probably worth drilling down. But hey, at least he got in the hunt, before the party was over. So Boomerang did its job.
Well, and that goes back to our last interview, Dave, where you said the biggest cost is lost leads. Like, can you imagine if you didn't have that notification, you would have lost that loan? Not lost leads, but lost loans. So that's great.
Cool. So guys, and this is a mastermind. If people have questions, put them down below. Alex, any questions or comments you have before Drake gives his presentation?
No, I'm eager to see what he's going to show him here because I've been running into some, I live in a small town, so people are pretty loyal to their hometown banks. and often wonder why they would go with a mortgage company. So I'm interested to see how he works this here.
Well, and one thing I'll point out too before Drake jumps in is, the fact is that Drake has a system for asking questions, right? He's digging deeper. He already has a relationship with them, and his CRM already has information on the clients. He built a rapport, he said 5 years ago when he did the transaction. But I would just tell you or ask you, do you have questions that you're routinely asking clients that guide them down the path of how you're different? Because if you just start spouting out rates and fees, or even if you just send them a TCA right away without asking the questions, you may be missing the opportunity to deliver the home run, which is what I know Drake's about to show us.
And that does bring up another thing, because guys, I know Drake and their platform, they have Mortgage Coach, they have HomeBot, and they have Sales Boomerang. And if you want to retain clients, even if when you're given that HomeBot value and Mortgage Coach annual reviews, what they do, sometimes people are still they're gonna check with their bank. They have a day-to-day, week-to-week relationships with their banks. So you need to make sure that you know about that. We'll talk more about if you don't have Sales Boomerang. It is an enterprise platform. You need to have at least 10,000 records under management, or your company needs to be a client. But we'll talk about that more later. So Drake, let's show your screen. And everybody, we're gonna go from he did discovery, he found the problem, and now we're gonna find out how he put his advisor hat and sales skills. To me, selling in this age that we're in, this digital shift era, selling equals advice. So how did you deliver the advice?
Sure. All right. Got my screen?
I do not, but I'll tell you when I see it.
All right.
Boom. We got it.
Okay. So what they were asking for was a rate and term of their current loan. So here's what they owed, and here's their estimated value. So of course, I started by showing them what they asked for, right? Here's what you said you wanted: 30-year fixed, new loan. We can save you $839 a month, which is awesome, right? Everybody's great with saving $800 a month. So I said, but there's better ways we can approach this. Let's first of all show you what we could do with that money, right? The next option over is I said, okay, what if we take $90,000 cash out, which pays off their 7.75 pool loan. And then we take that savings and add it to the new lower monthly payment. What does that do? The same out of pocket that you're making today cuts 4 years off of your mortgage if you wanted to approach it that way. That's cool, but let's look at another option. The third option from the left, $90,000 cash out refi, and then take that money and invest it with your financial advisor, which another nice part of this story, these folks did not have a financial advisor. So that was an opportunity here I was able to refer them to a great, a great financial advisor that I know that serves physicians. And that was a win-win there as well. So the next option is I said, well, let's take your $90,000 and instead of paying it down on your mortgage, which is a pretty darn low rate historically, why don't we give it to your financial advisor and allow them to grow it for you at a rate of return of 6% over the next 30 years. So what does that do for you? I'm going to switch to the more info button in the reinvestment tab. There you go. So here we can see that if they were to invest $1,000 a month at a rate of return of 6% over the next 30 years, they'd have an additional $1 million in their retirement package. But I said, let's even go beyond that. So I said, what if we take the $90,000 out, pay off your pool loan, eliminate that frees up, I think it was $900 a month. Then we're going to take that $900 a month, apply it to your practice loan that you've used to acquire your medical practice. We're going to accelerate that. That's going to allow us to pay that off early. It saved them, I think, $20,000 over the short period of time that they were going to do that to accelerate that loan. Then I said, once that's done, we're going to take, it doesn't show it there. We're going to take, I think it was 28 months or something on that order. We're going to take both the money you were spending on your pool loan, the money you were spending on your practice loan, and the savings we've generated on the refinance, and we're going to give that to your financial advisor. And over the next 30 years, that's going to generate for you $4.3 million. And here it is. It was at 23 months. So I built that into where it showed once the 23 months had passed, both of those other options were paid off, or both of those other loans were paid off. It freed up almost $5,000 a month for these clients. And they were able to give that to the financial advisor that I introduced them to. And they're going to be growing conservatively 6%. They'll have $4 million.
So guys, everyone listening to this, that is real wealth. I mean, that is a radical shift, making the same monthly output. So whatever their cash flow, we kept them cash flow neutral, and he showed them clearly and concisely how to reinvest that. He introduced them to a professional, and then let's think of the value. There's the consumer value, an extra $4 million in net worth. Hey, real quick, Drake, go to the go out of this details and show the net worth in the bottom. Yeah, right there. You know, super clean, super concise net worth over time. And then think about this too, guys. They brought an awesome customer to a financial advisor. And this last, what is it? Today is Tuesday. So whatever the last, Todd, when did we do that financial planner call?
We did that call Friday? Last Friday. Yes, last Friday, which was the...
Life is going quick.
Exactly. So, it was Friday the 18th.
So guys, this is a case study that you'd want to take to a meeting with a financial advisor. And by the way, even though this is Drake's, you could create your own version of this. Just go recreate this, and it's a scenario. This is a real world situation. This is a family, and this is how he did it. And you could change the loan amounts to make them more relevant to the markets that you're in. Everybody has got an awesome case study. Drake, anything else you want to share before you go around the panel and everybody asks questions and gives their feedback? Anything else you want to make sure you communicate here?
You know, I would just say the line that I've been using that seems to be landing with people a lot lately is that, you know, most people, almost everyone approaches getting a mortgage with the intention of and the goal of paying the least amount of interest possible, right? And that's fine, but what the goal really should be is how do we get you to financial freedom the fastest? And so I think if you can help people reframe that, you can win a lot.
Deborah, we need to turn that into a little piece of social media content. That's a great script from Drake. You know, most people, the goal is to pay the least amount of interest, but really the goal should be to achieve financial freedom the fastest and pay the least amount of cost over time. And he did both. I'm sure he cut their total interest cost over time, and he certainly increased their net worth. Todd, anything you want to call out here? Anything you want to say?
I mean, I think you just nailed it, right? You've got to come up with something for your market, right? I don't have too many clients who bought $90,000 pools and are buying medical practices, you're probably thinking. And so it's just figuring out what is a scenario that you can create that's similar to this, that you can bring in, as Dave said, to a financial advisor as kind of your show and tell of how you do business differently using the total cost analysis. I mean, the bottom line is Drake is a pro. He trained under Josh. And so, you know, I've known Drake for a long time, and I've always had huge respect for him. And right here, he's just showing, you know, why he's here, and love what you're doing, Drake.
Deborah, anything you want to call out or any questions you want to ask about this particular success story?
Well, it goes back to our interview on Friday where it's, you know, you just picture the banker with their itemized fee worksheet, just showing the rate and term compared to this. I mean, this is your secret weapon that if executed correctly and when shown advice where there's truth in the numbers and the way that it's presented, you know, I think there's a fear for consumers where, you know, you're a loan officer, so naturally they're going to be worried about their self-interest of how is this person going to take care of me, and their focus may be just rate and fees. But when you see this and the cost over time and the true mortgage strategy where this guy didn't even have a financial advisor, and now this type of net worth over 30 years, I mean, that just transformed somebody's life and just paradigm that it's incredible.
So Deborah, what do you think about putting this on social media? You know, like creating, what would be all the different types of content you would create that would help, one, tell this story to everyone that follows you, your email, your database? What are some thoughts on how to broadcast this story one to many, make it one to many?
I would make it one to many in every possible way, because these are the exact stories that people need to see, that eventually, when done consistently, is what creates that paradigm shift where most people are going to come into it and they're going to think just reducing my rate is my best financial strategy. But when you start with the question, is paying, which is more important to you, paying the least amount of interest or getting to financial freedom the fastest, and you send that in your Friday weekly email to your agent database, your client database. Hopefully you have a database of financial advisors or CPAs also going live, where it shows a very authentic, like, hey guys, I just wanted to jump on here because I had a client of mine that I'd helped 5 years ago who was starting the conversations with, just looking at a rate and term refinance. And that's sometimes the problem that the client thinks they have, but you have to go deeper to the problem that they aren't always aware of, which is, how does this home fit into their short and long-term financial strategy? And if you're not asking those deeper questions, like Drake create a system around, then how do you know if you're really giving advice? And so, kind of just like the name of this webinar for quote new loan officers, it's not just for new loan officers. If you're not using a total cost analysis for every single client, then you're not giving advice that's going to make a difference long-term. And so you've got to then prove your value. And what better way to do that on social than using a TCA? I mean, this makes it super easy to show that value.
So Alex, any questions or comments or suggestions after hearing this story?
Yeah, first of all, awesome mortgage coach, TCA, Drake. This is really, really very technical, but something that anybody could put together with a little practice. And the thing is, in this market, when I first got into mortgages a couple of years ago, you could talk to anybody, anywhere, and save them money on a refi. And now things are tightening up over the last couple of years. We have a huge housing shortage here in Elkhart County, and so we really have to find we already had to find ways to differentiate ourselves, of course, but more now than ever, we have to bring value. We have to show value to the realtors if we want to keep getting their referrals. We have to show value to the clients if we want to be seen as better than a bank. If we want to be seen as a mortgage advisor instead of just a loan officer. And Drake showing his clients this, or the rent versus own that I can show you. By the way, Dave, I did get the computer to jump on the Zoom call, so I think I can share the screen with you later. It just sets us apart. And what I've found is it doesn't even necessarily matter hopefully I can beat the next guy's rates and their products, hopefully I can, and usually I can. But a lot of times just showing them, like, even if you took, Drake, whoever you were going against, the bank that you're going against, even if you took their cost sheet and you just put it right next to yours and everything was exactly the same, the fact that you walk them through the options, I guess, Dave, that's the thing that blows me away the most, is that you can have the exact same rate, the exact same product, but the person at the bank just slid a piece of paper across the desk and didn't educate, didn't give any options. And that just wasn't as empowering as when you show them a TCA and you make them think about really their life, their investment. One of the biggest, investments in their life, obviously, is their home. And just by walking people through those paces, I have heard so many times, especially people who have, got a mortgage before, first-time home buyers, they're kind of getting spoiled because, they're getting a TCA for the first time. But people who have bought before from a bank, and then I walk them through a mortgage coach, they're just like, wow, this is amazing. Because people like options. People like to be educated. And that's what this software makes us look like pros. So very cool.
So, yeah, Drake, anything else you want to say or do on this particular TCA before we hand it off and bring Alex on stage?
I just would say if you feel like it would be of value, I could share some of the questions that we throw out, our standardized questions to our clients to start the
discussion. Yeah. Share away. We'd love to know.
No doubt, everyone's been wondering. It's been on the tip of all the listeners' tongues.
Well, and especially when I feel I can tell, you have those conversations, you can tell the people that are shoppers. When I start to feel that from somebody, I just immediately start asking questions. And like Alex said, they can feel that, and they're not getting asked these questions by their banker, right? So they can tell that you care about them and you're trying to help them with a more global perspective than just saving 1/8% and $15 a month on their mortgage payment. So anyway, one of the questions, the first question, any financial concerns or issues we can help you address? Do you expect your income to change going forward? Do you have a goal for your retirement age? Do you know what your income will look like in retirement? Do you currently have life, disability, umbrella insurance? Do you have a trust or a will? Are you thinking about any large upgrades to your real estate? Do you have a monthly budget and a savings plan? Do you have an emergency fund? Are you taking steps to reduce and minimize your taxes? Are you maxing out your qualified accounts, your 401ks, IRAs, all those things? And do you have a financial advisor or a CPA? So, we go obviously deep and take time on each one of those questions, but I just want to give you guys an idea. This is, like I said, built into our CRM. So I'm asking these on every single initial phone call. Oh, you can see these probably, huh?
Yes.
There you go. There it is.
I love Be in Touch. It looks like that's what you use.
Yep. We can't hear you, Dave.
Oh, Dave, you're muted.
Maybe Dave's broken. Well, that's awesome. I think, that's so helpful because so many loan officers struggle with what questions to ask. If you want to unshare now, Drake, you can, and then we'll all pop back on big before Alex jumps on.
Can you hear me now?
Now we hear you, sir.
You're back. You're back.
Yeah, I don't know what happened there. Hey, Drake, go to the Mortgage Coach advice engine, where you create the TCA. I wanted to show something else to folks, and then we're going to bring Alex on stage. So, he is a mortgage coach, grandmaster. He's created 3,578 total cost analysis. So he's asked these questions going beyond the transaction. This, again, everybody, selling in the mortgage industry is being an advisor. He's put a video on 2,899 of his TCAs. So a very big percentage of his TCAs have a video. And then guys, look at that. The number of report views, 22,454 report views. I would like to ask you, because that is an extraordinary amount of views per total cost analysis. Could you give us some of your scripting? And you can go ahead and stop sharing this because I just want to ask you some scripting questions and have Alex ready to come on stage. But what do you say to a family so that when they get that link with the TCA, not only are they clicking on it, which they obviously do in your case, but they're sharing it with others? If you can stop sharing your screen real quick.
I'm trying. Might need Robert again.
Hey, Robert, if you could, well, there we go.
There we go.
Go ahead.
All right. Okay, got it.
Got it.
Sorry, what was the question one more time?
What is your script when you give someone the link to a total cost analysis? How do you frame it? What do you say? Because you're obviously getting a lot of views. So you're doing this at a high level.
So in the email template that the TCA goes out on, I have my Calendly link, and it says in the email, I'd love to set up a time to review this with you. Please schedule here on the Calendly link. And then as soon as I send that email, I text them and say, hey, out of Be in Touch, I text them and say, hey, I just sent you a total cost analysis. I'd love to review it with you once you've had some time to digest. Here's my Calendly link to set up time. So they've now got an email and a text. And I mean, it's 99% they schedule a follow-up call.
So when we do that call with Josh in a week or two, I don't remember when we scheduled that. Let's go through, one, tell the story, show it, but let's also do some of the sales process and scripting around that, if you don't mind.
Yeah.
I have one question, Drake. Do you typically send a video with your TCAs?
Every time.
Oh, good.
Yeah.
Wow.
Hey,
Didn't you see that like 28,000 or 20? I mean, it was 90% of them.
2,000 views. It's crazy. Hey, Dave, real quick too. Someone was asking in Facebook that on that TCA specifically, if you were using the debt consolidation, Dave. So it might be worthwhile if you can point out to folks how they can access the training with Mortgage Coach that's every day, and then specifically address that question.
Yeah. So what I'm gonna show on my screen, and then we're gonna bring Alex on. I just want to make sure everybody connects the dots on this because it is this is a training, and while we did part of the training today, there's more left to be done. So if you go to our website, and there's a couple different ways that you can get to this resource, but if you go to resources, you go to daily trainings, and there's a training. Like, so this Wednesday training at 11 o'clock, you have to sign up for it. Each one of these is a link. We train on stuff like this. Every Thursday at 9 o'clock, we train on stuff like this. Do want to remind everybody that on the 8th, you need to sign up for it right here. Click on this link right here. We're doing Scriptapalooza. So that's the place to do it. And then also, while we're on this screen, I want to show you guys, we have great on-demand training. So if you're new to Mortgage Coach, get started, how to read a TCA, how to personalize it, all the 101 stuff, and then intermediate stuff, how to build templates, things to go at scale. And then I would say what Drake just did is it's an advanced strategy. Also, Drake, I'm going to recommend to the team that we consider you for this top producer highlight, where we've taken very specific, some of the best TCAs and some of the best interviews, and we're actually putting the link. So Alex, I don't know if you knew it, but I don't know if it was last year or the year before, you were one of the best TCAs, the single mom refi. You guys can listen to an interview that we did with Alex, and you can see his single mom refi TCA. So it's a very similar strategy to what Drake just did. Only one, he used the whole debt consol module. So he delivered it with all of that. And it wasn't as much of a high net worth individual. You had a single mom who just knew she didn't want to go backwards. She'd been paying her house and she didn't want to go backwards. And Alex used Mortgage Coach to show her how she could get some cash out, how she could consolidate some debts. And again, it made a massive difference. One of the options would have helped her pay off her house 7 years faster. And the other option dramatically increased her net worth. So there's some training resources, guys. All right, Alex Cook, jump on stage, bro.
Yeah, real quick, just because this is kind of a training mastermind, I have a question for Drake, if you don't mind.
Yeah.
Hey, Drake, so I saw you have a crazy amount of videos that you've sent with your TCA. So do you typically prefer, like if you have the option to do it either way, do you prefer to do it live, screen sharing with them, or do you prefer to do a video? Or does it depend how busy the individual is, or if you keep missing them?
I always do a video, and I always try to follow up live afterwards.
Wow. Okay.
Most of the time it's both.
Okay. So do you find that the video is just kind of a pro move because it's in their inbox, you don't keep hitting each other's calendars and missing each other? Is that, or just because then they have a video of it?
Yeah, it just gives them a little bit of sense on how to navigate the TCA, draws them to what I'm thinking and sort of why my intent of why I showed them what I showed them. And then just gives them a little quick, usually my goal is for those videos, they're 1 minute. So it's a hello, thank you.
Okay.
That's how I've personalized it to them. And I didn't just make this up for anybody, it's specific to them. And it is just a super quick walkthrough. I make sure that they can find the more info button so that they can find the closing costs and things like that.
Yeah, that's a really good idea.
It's the movie trailer. You want people to come to the movie, give them a little movie trailer so that they feel the love, and now they want to like sit down, get some popcorn, and have a real strategic meeting. Is that fair enough, Drake? Is that a good synopsis?
Yeah.
That's awesome, Drake. If you don't mind, maybe send me one of those videos, because I've done the videos before, but I do the whole presentation. Like if I keep missing somebody, or if it's like somebody who's really busy, they're traveling a lot, I'll just make a video of the whole thing, but they end up kind of being what I feel like is a little bit long to just watch a video. So I like the fact you do like a little trailer, like a little teaser, and then of course they want more, so they call you to set up the appointment. Okay, thank you. All right, so let me see if I can switch this here, because this is on the computer. So let me share.
So while he's pulling that up, guys, so that was a client thinking about refi. Well, most rate and term refis are out of the money right now. There's still a lot of debt consol, a lot of cash out, and there's still people want to know, does it make sense? And then creatively, there's a whole lot of folks that, their rating might even go up, but if their freedom point goes down, then it makes sense. So you be a master at that. And then be a master with purchase TCAs and changing the narrative. One of them is a first-time home buyer providing a rent versus own. For a family that already owns a home, the move-up analysis can have the same wow financial planning, wealth building impact as that. Like one of the best purchase TCAs is the move up. Check out the Amber Kovark move up analysis. It's in our top producer insights. It's super, super slick. So let's see what you got here, Alex.
Yeah, so I've been running into a lot of hesitant buyers. You know, they're wondering if the market's too high. They're wondering if they're overpaying, and it's been like this for a while. And so one of the things that I've heard back from my realtors, and of course it's great to hear this because we're trying to always provide more value to our clients and our realtors, right? And so the clients that, you know, when you're dealing with first time buyers, one of the things that your agents will love if you can do is not only educate them, that'll take the fear away, you know, from what they're about ready to embark upon, but also if you can kind of get them to be aggressive. And don't get me wrong, I'm not just firing them up to go out there and make irresponsible offers on homes. I don't know if I'm that motivational that I could even do that. But what I tell them is, guys, I've seen too many people that are disappointed, or the wife's mad at the husband because he wouldn't go as high as she wanted to on the home. And to be honest with you, of course, I don't say it this way, but they're kind of sometimes wasting the realtor's time, right? In this market where it's uber competitive. And I don't know if it's as competitive across the country as much as it is here, but we're at an all-time low for housing in our area. It's crazy. And so I want my buyers to go out there and be prepared. So one of the things I look for is how long they've been renting. And I always tell them, because I don't want them to feel any shame for renting. Of course, there is a time of life where it makes sense to rent for a short period. And but I had someone the other day that had been renting for 10 years. And they still were really, really timid to go out there and to buy a home. And they had a lot of different, you know, mental barriers to that. And so I almost felt bad showing them a rent versus own because of how much money they had thrown away over 10 years. But it's what we have to do, you know, if we're going to educate them properly. So can you guys see my screen okay? Do you see the TCA?
Yeah, we can see the TCA, and make note, everybody, he's got the experience.com formerly social survey integration. So nice job, best practices, showing your review in the bottom left-hand corner. And go up to the top real quick. I just want to take a quick look at your branding, you know, company branding. Notice that both these loan officers were very intentional about their photos. You know, Drake shows a picture, you know, the picture he wanted to show with his family around, you know, hey, I'm a family man. And that's the story he wanted to tell. Alex is buttoned up, you know, cool business dude. That's the professional story he wants to tell. So be intentional with your branding. Anyways, get after it. Looking forward to hearing this story.
Yeah, you know, Dave, usually I'm wearing a flat bill cap, so I had to actually, you know, post one of when my hair was done and I was dressed up. So anyway, yeah, like I said, this will kind of make people sick if they've been renting for a while, but that is the intention, is to not have people throwing away money and paying somebody else's, you know, creating value in somebody else's property. So in my area, the cost of homes aren't as high, you know, as where Drake is. So I started off here, and plus this is, you know, first time buyer. So I'm looking at 150,000 for this one, 200 for this one, and 250 for this scenario. I just put in kind of a standard, you know, 4% interest rate across the board. And all you really have to do is, you know, before I even show them the TCA, I just talk to them, because the biggest objection is always that, you know, well, typically anyway, they're going to be spending a little bit more monthly, you know, buying a house. And so, you know, can I afford it? Is that a smart thing to do? So I always talk them through that first. And then I talk to them about principal versus interest. And I always make the joke that, of course, there's more interest than you would like to see when you look at the payment breakdown, but there is principal, and that is putting money away for your future self. And that's kind of how I start the conversation. And then I also talk about appreciation, which I think nationwide was about 20% this last year. I know in my area it was 10.6% appreciation, which is insane. And then all you really have to do is click here and show them the net cost of renting. And this is the 5-year, this is the 60-month. And how much principal they've paid down versus how much equity that they've built. And this is, I believe I have this set at a standard 4% appreciation right now. Because even though it was 10.6%, obviously it's not going to be like that every year. So I don't want to pad my numbers, because you don't really have to impress them. But I mean, just look at this, the equity that they're giving up. And I'm telling you guys, every single time, their jaws drop and they want to go out there. And then another cool one to show them is the cost of waiting, which I don't have one of those built out for you guys, but the cost of waiting, I showed someone the other day, and it was somebody who was throwing in really low offers. And they were on a VA loan, which is already, harder to get accepted in this market because the stricter appraisal process. And they were, on a VA loan, throwing in below asking offers. And I could tell that they were just timid, they were nervous. And in that cost of waiting scenario, just showing them that literally the 3 months that they've been out there shopping, the rates had gone up so much while they're throwing in kind of these lower, offers that really had no chance. And the realtors were really nice and patient with them and didn't really want to tell them that you guys don't have, they kind of would tell them you guys don't have a chance, but they weren't flat out saying, you're wasting time. They could have made an offer for $50,000 higher than what they thought they could afford, because the rates had gone up that much to affect their monthly payment. So their monthly payment was $100 more a month now, just by waiting several months, kind of being timid, poking around and throwing out these light offers. And that blew them away too. So I said, guys, nobody knows what's going to happen with the rates, but they could go up another 0.5%. And so just to kind of make people think about things in a different way. And I always tell people, I'm not telling you what to do. My job is to educate you and just to make you look at this from a lot of different angles. And what I've found, Dave, like I said, earlier in the conversation, is that they come out of that conversation more empowered. They're not scared. You kind of remove some of those mental barriers to them, being fearful about buying a house to begin with, or am I overpaying? You answer that question too. The answer is you're overpaying by paying somebody else rent. And so my realtors really do appreciate it. Sometimes if I'm working with a new realtor, they literally say, I don't know what you told them, but they are fired up and ready to buy. And that's when I tell the realtor, I show the realtor, the TCA and the rent versus own, which also makes us look awesome to a new realtor as well, if they've never seen one before.
So guys, making a case for delivering advice as a sales strategy, think about this. This is selling. When you're able to deliver value beyond, I close loan on time, value beyond, I have great rates and I'm available 24/7, value beyond, I can close transactional, I can solve transactional problems. When you can help, this is a problem that very few loan officers in America could solve for a realtor, and that is creating urgency around getting off the fence of renting and into escrow of homeownership. It's huge. And think about it, when you can show someone, and again, not in a way that's rubbing it in, but in a way that, hey, I'm a financial planner. I love that. I haven't heard a lot of people say that from stage, that you're asking people how long they've rented, and then you're factoring that into the presentation of the rent versus own, so they can see, hey, this is how much you've lost. It's kind of, by the way, it'd be interesting to see how this community plays it. But from a Jeremy Forcier standpoint, it's like, this is what it was. This is what you lost. This is where you're at today and what you can gain. And if you wait a year, this is what it could cost you. So I love that. Let's go around the panel. Todd Bookspan, any comments, questions, or coaching notes?
Well, I think you nailed it, right? When we interviewed Jeremy Forcier a week ago, he really talked about this whole idea of educating your borrowers and the whole idea to requalify. And so if you haven't watched that, I would encourage that you do. And really the bottom line is this, is that if you're not doing the education like Alex is doing, like Dave just talked about, Jeremy doing, you have to think about it. Number one, first and foremost, so that you requalify your buyers so that you don't end up having them putting offers in that they no longer qualify for. And it's just a great opportunity to reach out to a real estate agent. One of my team members had a new realtor that kind of was referred over, kind of attached to a borrower that was referred to them. And they had sent an email to him saying, hey, Have you educated the client on the fact that rates went up and how that impacts their buying power? And I coached him to respond, yes, I do that with a total cost analysis. Are you familiar with that tool? Question mark, right? Super simple, short email. And he replied back, no. And then he said, great, I'd love to set up an opportunity to meet with you so I can show it to you, as it's the best way for your clients to understand what's going on in the market. And he got a meeting with a pretty high producing real estate agent that I don't think he would have gotten otherwise.
Drake, any questions, comments, coaching notes you have? And then Deborah, if you could go after Drake.
Yeah, Alex, I'd just like to know, is the rent versus own something that you do as a practice for every first-time home buyer, or do you just kind of bring it in when you can kind of feel they're maybe ridging on buying and saying, maybe we're just going to continue to rent?
Yeah, I kind of feel it out. Just like you were saying earlier, you can always tell when you get the shoppers, you can always tell when you get the timid people. And sometimes if it's an agent that I work with a lot, they'll kind of give me cliff notes like, hey, this person is kind of poking around, or what their fears are. And what I've found, Drake, and this is something I meant to say earlier, is that when you're working with any realtor, it's always good for the borrower to hear it from us as well, right? It's like when you're out there, I don't know, I guess a used car sales lot or even a new car sales lot is a good example. You know, you don't always want to talk to the guy who's sprinting over to you to sell you the vehicle. Instantly, we're kind of put off by it. And I'm not saying realtors come across that way, but I think people kind of have their defenses up a little bit. And then that's why they bring you in to talk to the finance guy. Well, hey, no pressure. Let's just see what you can afford, right? And then the finance guy, if he's good, finance girl or guy, opens your mind to the world of possibilities of what you really can afford. And now all of a sudden, you want to go talk to that guy that wanted to show you the car that just before you didn't even want to talk to him. To be honest, you just kind of, at least I always say, hey, I'm just looking, I'll let you know if I need you. But now, what changed between those two interactions is that your mind has been opened up to the possibilities of what can happen. And so yeah, that's to answer your question. I feel it out. But something that I wanted to plug earlier was just the fact that, we really are kind of a 1-2 punch with the realtor, especially if you're working with a good realtor combo, because a lot of times people will open up to us in different ways when we're talking about their credit report and, the most vulnerable things in their life and financially anyway. And so, yeah, it's, I feel like they take certain things better from us. I don't know what you think about that, but I do show every single buyer. This is something that my mentor, Pete, really harped on, to show every single buyer a mortgage coach with a pre-approval, because they're not seeing that other places. So all of a sudden you're set apart right there as well.
So new loan officers, I did that interview with Pete Metz, the mentor to Alex, probably 2 years ago. And highly recommend you check it out. I want to remind everybody, we've got a new loan officer playbook. I'll put a link down below. It's currently in my LinkedIn articles. I'm going to be putting that, and Todd and I are reworking that. It's going to be on the Mortgage Coach website on our blog soon. If you're not following the Mortgage Coach blog, start following it. I am going to make that my base camp for most of my long form content. I for years I've been putting that in my LinkedIn. I'm going to start putting that in our blog. So check that out. Deborah, any coaching notes, any thoughts, any questions?
Yes. So with social today, words are no longer enough. So what Alex just said is, to me, I'm telling clients, show me, don't tell me. And so the fact that you're giving that total cost analysis with your pre-approved clients, that's you showing them where they can trust the clarity and transparency with the truth in numbers, because you're showing them visually. It's not just a PDF with an itemized fee worksheet that you're trying to put side by side that doesn't show the value over time, so that people can feel more confident and secure at making better decisions, which right now, there's 6 billion messages every second from all platforms that create a lot of noise for people, and they can't make decisions very well. So you've got to remove all friction and make it very easy and simple. And this is what the TCA does. So the first thing is show me, don't tell me. The second thing that Alex said is when the mind is opened up, what this does for your brand is it makes you memorable. And you need to become memorable and not just, an avatar or a robot lender that's just showing the itemized fee worksheet. That's easily replaced, guys, because when you're memorable, then you're most likely going to be referred and have raving fans because you've just opened up that mind, and it's like a rubber band. When you stretch it, you're so grateful for the lesson because it's now created this wealth for them. Or the fact that the renter, like, I love that you ask how long that you have been renting. And just so you know, Alex, I read this stat, I think it was with Keeping Current Matters, but the average renter before they buy their first home right now is 11 years, which is haunting to think about. Like, there's a lot of people renting and they don't even know at the cost that it's costing them at 100% interest. So I also liked with the TCA when you showed them the principal paid. And although, like you said, it may not look like very much, you're making a housing payment. One's at 100% interest, and one you at least have a little bit going towards an investment that's going to grow in equity and appreciation over 5 years, 10 years, however long you plan on being in the home. So I challenge the community who's listening right now, today's TCA Tuesday, where I put the squeeze on clients to go live and show a TCA, and you could use the one that Alex just showed or Drake, to help educate and inform someone who may need the message. There's somebody out there who may hear it and think, oh, that's my brother, that's my sister, and they share it with them, or a financial advisor hears it. But go one-to-many today. I prefer live, or if you don't want to go live, then do an Instagram reel or do a reel, because that has the best traction, but get this education out there.
So I got to jump in a minute, and Todd's going to close it out, guys. But I got two big takeaways that I've never said these words together like this, but the cost of renting analysis. And I would like right now, if I was a loan officer or mortgage coach, I would go, oh, Deborah just said the average time for renting is 11 years. I would, first of all, want to get a source for that. Second of all, I'd want to see what rates were 10 years ago. I'd want to see what values were in my market. Like if I was in Dallas, Texas, I was a loan officer. What was the average purchase price in Dallas 10 years ago? What was the average loan amount? And boom. And then I would go today. What is the average? So that is the cost of renting analysis. So I would create a whole story and strategy around that. And then I love what Drake did, the cost of the wrong rate and term refi. And do a cost of the wrong rate and term refi analysis. I just made that up, but you could literally, just go, hey, had this family, they were going to go with their big bank, or they were going to go with big online lender, and they were going to save $800 a month. That's a good deal, right? And then boom, boom, boom. You could do that in 5 minutes and or just the cost of the wrong loan. At the end of the day, this is what differentiates a mortgage coach from every other loan officer in America, is you guys can show this in a way that's super simple, in a way that's super compelling. And at the end of the day, a mortgage coach loan officer is in an entirely different business than a fee worksheet loan officer. A fee worksheet loan officer is in the business of selling money and loans and interest rates. And a mortgage coach loan officer is in the business of selling freedom point faster and wealth with real estate faster. Like, it's a different game. So Todd, I've got to actually jump on another Zoom. I'm gonna let you close this out. Drake, I can't wait to be on stage with you and Josh in a week. Alex and Drake, I think the vibe, like, this was a cool little chemistry. If you guys come up with another TCA in the next couple months that you want to, I like this. Each one of you gave a lesson, you shared a story, and it created value. So if you get any more, I would love to do a repeat on this in March, April, May. You're both invited back, and if you come up with an idea, let's do this party again if you're game.
That's awesome.
I hand it off to you, Todd.
All right. So hey, Dave.
Wait, one more thing. One important thing. I put it down below, but I am seeing so much stuff on social media on rate shopping. I just want to remind everybody, and I put a link. Go review the lead conversion playbook by Mortgage Coach. There's a lead. I mean, it's step by step on how to optimize conversion, and then also there will be an updated version of that in our blog sometime in the next week or two. So stay tuned for that. Sorry, Tom. Go ahead.
No worries. I was just about to say, I just threw the link into Facebook and then also into the Zoom channel. And those of you watching this on YouTube, you'll see it down below. I threw the registration link for Scriptapalooza 2022, March 8th. So 2 weeks from today, we're going to be rocking and rolling, and it's going to be a great time to hear the best scripted originators in the country walk through, how they're talking to borrowers in this shifting environment. So that's going to be a lot of fun.
And one more thing, we're going to have a total of 12 loan officers on that stage. We've confirmed 10 of them. So there are 2 more slots open. If you have an amazing script or a loan officer, got to be a baller. Like, our target is 100 million or more in production, but we've got some that are at 70 because it's just such a great script. But if you're doing a lot of volume and you've got a great script you want to share, wait till Dan Keller just told me what his script's going to be. I can't wait to hear it. But if you got a script that you want to share at Scriptapalooza, we got 2 seats open. Let us know down below. Take care, Todd.
All right, Dave. All right. Hey, so we got a quick question. We got 3 minutes left. So I don't know if you can knock this out pretty quick, Alex, or not, but someone was asking if you find your conversion is good with those long videos, right? We heard Drake say he does just a 1-minute video and then he pushes them to his Calendly link. And are you having any challenges with your longer videos and converting, Alex?
So I'll be honest, I only do it when I can't get a hold of the person live. I much prefer to have husband, wife, if they are married, doing it live with me, which is, I know what Drake prefers too. He's using his as a hook, which is what I'm going to start doing. That's a great idea. The times where I've had to do it because we're just missing each other, or it's, a doctor working all sorts of hours or just whatever. After we miss each other a few times, I just go ahead and do the video. And after I do it, every time I'm like, oh my gosh, how can I make that shorter? But I want it to be comprehensive, but every single time it's resulted in a closed loan. So yeah, I think it's helpful. And now don't get me wrong, they still want to, ask questions about it. So we do get on live after that. But I really like Drake's approach there with just using it more as like a teaser, like a little trailer. And then they're going to want the conversation more. So I think I'm going to probably start doing that.
Love that. Love that. Any other thoughts on that, Drake, or any last thoughts for the group before we send everyone off to be productive?
It's quick. I like following it up with a text as well. I find that drives them to the email with the links, and then they can just do it on their phone or do it on their computer or whatever.
Yeah, I think that's the secret sauce. I love the fact that you follow up with a text. And I would tell you, I coach my team. I believe having a 1.5 to 3 minute video explaining it to the client, to me, that's always a best practice. And I think Dave would agree, because what I tend to find is that if you just meet with the husband or the wife or the financial advisor or whoever it is, the video gets passed around, right? You already saw that the average number of views that Drake had on his videos that were on his TCAs. And so think about that. We all know how the telephone game works, that you tell and explain it to one person and they tell and explain it to their spouse or their dad or mom, their friend who's the mortgage expert. And we know it always gets messed up. So when the video's on there and it's you explaining in your words why you're recommending these different strategies, I think that's how you win more often than not. Any closing thoughts from you, Deborah Bird?
No, I just wonder I would think the longer video would work well, just for the fact that sometimes people need to re-watch multiple times to really comprehend something. Agreed. Or maybe they're making multiple offers and it's taken, a couple months to find a home, that to be able to go back and revisit something that they may forget. That's the only thing I was thinking of with the longer video of what I like about it, is because it could eliminate future emails or maybe unnecessary touches. If
that's a good point.
You could rewatch it.
I 100% agree, because people are overwhelmed typically the first time you go through. It doesn't matter how slick you are. I shouldn't say how slick, that's the wrong word. How complete you are in your explanation and how crystal clear you've made it. I tend to find they still go back and say, gosh, wait, what did he say there? And it just gives that opportunity. And I do think then the whole follow-up piece is really key to do that. So,
Most
as
only
always,
retain about 2% after 2 weeks of what you tell them.
There we go. All right. So this was one for the ages. I have no doubt this is going to be a video that makes it really high in the playlist for 2022. Could be one of the top 10. Drake, it was great seeing you. Thank you so much for your time. Welcome to the Mortgage Coach stage. Alex, good seeing you again. As always, you crush it. And of course, I can't say enough about Deborah Bird and Plug and Play SM for social media. Appreciate you being here as always. And most of all, to all of you, you just invested an hour here of your time, either watching this live or watching this in YouTube. And what I would tell you is you need now to take some action. Go back and rewatch this, look at how they created value for their clients, and go out and do the same. We appreciate you. We'll see you on Friday for our mastermind call. Thanks so much. This call is a wrap.